They say stars shine brightest in the dark, but in 2025, the three-pointed star of Mercedes-Benz looked more like it was navigating a black hole. While everyone was busy looking at their shiny new electric concepts, we spent weeks digging through the fine print of their annual report. What we found isn't just a dip in numbers, it's a calculated, high-stakes gamble that could either save the empire or leave it in the dust. Welcome to the HDIN Deep Dive into the 2025 Mercedes-Benz Tactical Retreat. On the surface, everything looks fine. It's Mercedes. They still make the S-Class, the ultimate "I've made it" symbol. But here's the problem. The very ground they stand on is shifting. Imagine trying to upgrade your house's entire electrical system while a hurricane is hitting the roof. That's Mercedes in 2025. They're trying to build a digital future while the old-school gas engine world, the one that actually pays the bills, is facing a triple squeeze from China, tariffs, and high-tech costs. Now, hold on to your seats. Here is the hook. Mercedes brought in nearly $150 billion in revenue. That is enough money to buy every single person in New York City a brand new Tesla and still have change left over. But despite that mountain of cash, their actual profit, the money they actually get to keep, dropped by a staggering 57%. It's like selling a record-breaking number of lemonade cups, only to find out you spent more on the lemons and the stand than you actually made. Why the crater in their pocket? Let's talk about the China shock. So, is the ship sinking? Not quite. Think of 2025 as scraped bone treatment, a classic Chinese idiom for a painful but necessary surgery. Management looked at the books and decided to clean house. They chose to take the hit now, clearing out the old costs and restructuring the team so they don't have a, quote, financial hangover in 2026. It's a tactical retreat to protect the castle. Let's look at the family pantry. Even though the harvest revenue was down 9%, the grain in the silo, net liquidity, actually increased to over $36 billion. This is crucial. In the car business, cash is oxygen. Mercedes might be bleeding a bit from the bottom line, but they've got enough oxygen tanks to survive a very long winter. They aren't broke, they're just repositioning their assets. Where did that profit go? Look at these bars. The drop from $15 billion to $9 billion is essentially the cost of the, quote, China price war. In China, local EV brands are fighting like piranhas. To keep their spot at the table, Mercedes had to offer discounts that would make a luxury brand wince. Plus, they spent $1.8 billion just to quote themselves. They're paying for a leaner future, and it's costing them dearly today. Here's a fun fact. The boring delivery vans are actually the ones keeping the lights on. While the fancy S-classes were struggling with margins in the East, the Mercedes van segment was a cash cow, maintaining double-digit margins. It turns out, delivering packages is currently more profitable than delivering billionaires to their galas. China was once the infinite money glitch for German automakers. Not anymore. Revenue there plummeted by nearly 29%. That's a giant hole. Why? Because the Chinese consumer is no longer just impressed by a shiny badge. They want a spaceship on wheels. Mercedes is now racing to prove that a German spaceship is still better than a local one. This slide is for the geeks, but it matters to everyone's wallet. Mercedes decided to pay for their R&D research now instead of pushing the bill to the future. It's like choosing to pay off your credit card in full today so you don't owe interest tomorrow. This makes their current profit look worse, but it makes their future profits look much, much better. It's a classic hide the treasure move. Remember the family pantry? Here it is again. $36 billion. To put that in perspective, that's enough to buy a fleet of private jets for every employee and still have billions left. This cash fortress is why shareholders aren't panicking. Mercedes is built like a tank, even if that tank is currently moving through some very thick mud. The future of luxury isn't leather seats, it's lines of code. Mercedes is launching MB.OS, their own operating system. They're trying to build an iPhone on wheels. By owning the software, they can sell you updates, self-driving features, and digital extras long after you've bought the car. This is where they plan to steal the, quote, infinite money glitch back from the tech companies. Efficiency sounds boring until you realize it means saving billions. They're streamlining the team, sourcing parts locally to avoid tariffs, and even making, quote, green aluminum. It's about being faster, leaner, and harder to kill in a trade war. But let's be real. The road is full of nails. Geopolitics, tariffs, and chip shortages. If a trade war breaks out between the West and the East, Mercedes is right in the crossfire. They are a global brand in a world that is becoming increasingly local. That is their biggest risk. So when do we see the comeback? Management is pointing to 2026. They have 40 new models coming out. Think of 2025 as the year they went to the gym, suffered through the workout, and cleaned their diet. 2026 is when they plan to show off the muscles. Mercedes-Benz in 2025 is a story of resilience, not ruin. They're betting big on a digital, luxury-first future. Do you think they can out-tech the Chinese giants? Let us know in the comments. For the full, unvarnished data behind this analysis, head over to HDINResearch.com or drop us an email. I'm your analyst from HDIN, and we'll see you in the next deep dive.